Welcome to the latest episode of This Week in Financial Markets. I'm Ether, and I'm thrilled to be joined by my awesome co-host, Bit. Hey, Bit.
Hey, Ether, and hello to all our listeners. Man, what a wild week it's been in the financial world. U.S. stocks were a sea of red, Bitcoin was doing a breakdance around the $100,000 mark, and the crypto market felt like a Hollywood action flick.
How does Bitcoin breakdance? You sure know how to paint a picture, Bit. Today, we're diving deep into the U.S. stock market, Bitcoin, and the broader crypto scene. We've got a slick Bitcoin price chart to illustrate the action, so if you're watching on video, get ready to be dazzled.
Absolutely, and we're going all in today with extra insights, some juicy market stories, and practical tips for investors. From big players like BlackRock to Elon Musk's tweets, we're covering it all.
Love it. So no more waiting. Let's jump into the markets. Are you ready, listeners? Let's dive in.
Buckle up, everyone.
All right, Bit. Let's kick things off with the U.S. stock market. It was a bloodbath this week. Dow Jones, NASDAQ, S&P 500 all took a hit. What numbers do you have for us?
Oh, Ether, the numbers are enough to make you wince. The Dow Jones shed nearly 900 points in the final session, its biggest drop in 3 months. The NASDAQ got hammered, losing over 3% in a single day, its worst performance since 2022. The S&P 500 wasn't spared, down 2.5% for the week. Futures are signaling more gloom, with Dow futures dropping 700 points, S&P 500 futures off 1.2%, and NASDAQ futures down 1.8% as of Sunday night.
Ouch, that stings. What's driving this market meltdown, Bit?
3 main culprits, Ether. First, fears of a recession. Inflation's still sticky. Last month's CPI came in at 3.4%, above the expected 3.2%. That's got folks worried the Federal Reserve will keep interest rates high for longer, squeezing companies reliant on borrowing like tech or real estate.
Yeah, inflation's like that uninvited guest who won't leave. What else is going on?
Second, geopolitical tensions. Escalating conflicts in the Middle East, especially between Iran and Israel, push Brent crude oil to $80 a barrel. That's raising concerns about energy costs and global inflation. On top of that, Trump's threats of 10 to 20% tariffs on imports from China and the EU have rattled markets, sending the VIX, the market's fear gauge, to 25, a 6-month high.
Trump's tariffs are stirring up chaos. I saw tons of chatter on X last week with posts like, Trump's shaking up the markets again. What's the third factor?
Investor sentiment, Ether. Hedge funds and institutions are pulling out big time. Bank of America reported $15 billion in net outflows from U.S. stocks this week. Investors are flocking to safe havens. U.S. Treasury bonds, 10-year yields hit 4.2%, and gold, with spot prices reaching $2,650 an ounce. It's like everyone's ditching the party for a bunker.
Great analogy. How about crypto-related stocks like MicroStrategy or Coinbase? How did they fare in this storm?
Mixed bag. Circle, the company behind USDC stablecoin, surged 10.6%, boosting its market cap to $26 billion after announcing plans to expand cross-border payments. Fintech firms like PayPal and Square saw slight gains from crypto integration, but on the flip side, MicroStrategy dropped 8% as Bitcoin wobbled. Coinbase fell 6.5% due to rising regulatory compliance costs, and Galaxy Digital lost 5% amid weaker crypto ETF flows.
Sounds like a financial chess game. Got any real-world examples from the market?
Yep. Last week, @StockMKT Insider on X posted about a major hedge fund dumping tech stocks like NVIDIA to load up on consumer staples like Walmart. It's a clear shift from risk on to risk off. The X community was buzzing with over 500,000 interactions around #StockMarketCrash. One user even joked, "Is it time to hide my money under the mattress?"
X is the pulse of the market. What's the outlook moving forward, Bit?
Short term, it's still grim. Investors lean into defensive stocks like Walmart or Johnson & Johnson and steer clear of high-valuation tech like Tesla or Apple. But long term, if the Fed eases monetary policy by late 2025 and geopolitical tensions cool, say a Middle East ceasefire, markets could rebound. This week, Wednesday's job report is key. If unemployment tops 4.1%, expect more selling pressure.
Sounds like investors need to stay calm and keep a close eye. Thanks for the deep dive bit.
My pleasure, Ether. Now, let's get to the main event, Bitcoin.
That's some serious volatility. What does technical analysis say about this chart?
The chart tells us Bitcoin's below its 50-day moving average at $108,000, signaling a short-term downtrend. Key support levels are $82,000 and $74,000. If it breaks $82,000, we could see $70,000. Nobody wants that. But if it clears $110,000, it might target $120,000. RSI is at 45, neutral territory, but declining volume suggests the market's hesitant.
Sounds like Bitcoin's at a crossroads. What's driving its price?
A ton of factors. The biggest is Trump's policies. He signed an executive order for a strategic Bitcoin reserve, treating BTC like a national asset akin to gold. That's a game changer. Nominating Elon Musk as a senior economic advisor also lit a fire under crypto, with Musk tweeting #ToTheMoon, racking up over 2 million engagements on X.
Musk is the king of market movers, but I heard there's some drama with Trump's policies, right?
You bet. Despite Trump's crypto love, his reforms are stalled by budget fights in Congress. That spooks some investors into taking profits, dragging Bitcoin down. For example, a big fund on X tweeted they sold 500 BTC, fearing delays until 2026. The post sparked a heated debate with 10,000 retweets.
What about institutional money?
Bitcoin ETFs saw $267.5 million in net outflows this week, per BlackRock and Grayscale, a stark contrast to last month's $5 billion inflows. But whales, wallets with over 1,000 BTC, are playing smart. Glassnode data shows they sold 10,000 BTC at highs, but bought back below $90,000, creating strong support.
How's the macroeconomy affecting things?
Big time. Trump's tariffs are stoking inflation fears, making risk assets like Bitcoin less appealing. U.S. 10-year Treasury yields hit 4.2%, raising the opportunity cost of holding BTC. China's $50 billion Treasury sell-off added to the chaos, yet the X-crypto community stays hyped with over 1 million interactions around BTC this week.
X is the place for market vibes. Got any fun stories from there?
Oh yeah. @CryptoBull posted a Bitcoin chart predicting a rise to $120,000 if it breaks $110,000. It got 50,000 likes, but skeptics fired back saying 70,000 was coming first. The X crowd split into bulls versus bears, arguing like it's a World Cup match.
Ha, crypto drama never gets old. What's the outlook for Bitcoin?
Short term, the chart suggests Bitcoin could dip to $80,000 if stocks keep sliding or geopolitical tensions flare up. But long term, it's super bullish. Trump's policies, institutional adoption, and Bitcoin's anti-inflation role are huge drivers. If the Bitcoin reserve happens, we could see $150,000 by the end of 2025, per ARK Invest.
That's exciting. Thanks for the deep dive bit. The chart really brought it to life.
No problem, Ether. Now let's zoom out to the whole crypto market.
Time for the big picture on the crypto market bit. What's hot beyond Bitcoin?
The total market cap swung from $1.7 trillion early in the week to $2.1 trillion midweek, now settling at $1.9 trillion. Bitcoin holds 50%, but Ethereum's stealing the show, up 5% to $2,800 thanks to $78.2 million in ETF inflows. Over 500 DeFi and Web3 projects launched on Ethereum in Q2 2025, so ETH is on fire.
As an ETH fan, I'm loving this. What about other coins?
Ripple steady at $0.55, with trading volume up after settling its 4-year SEC lawsuit. Dogecoin jumped 8% to $0.15 after Musk tweeted Doge, one word, and the market goes wild. Trump-related meme coins like Trump surged 12% after Trump's crypto posts. Stablecoins remain the backbone, with USDT and USDC hitting $150 billion in total value locked, up 10% from last month.
Meme coins never cease to amaze. How's market sentiment?
It's a mixed bag. On the bullish side, Trump's policies are a big lift. His crypto reserve plan and spot ETF approvals for Bitcoin and Ethereum are building confidence. States like Texas and Wyoming are rolling out pro-blockchain laws. Big institutions, BlackRock, Fidelity, JP Morgan, are diving in. BlackRock just launched a $1 billion blockchain fund focused on DeFi and NFTs.
Sounds like a financial revolution. Any red flags?
Plenty. Regulations are a headache. The EU's MiCA and U.S. proposals to tax transactions over $50,000 are hiking costs for exchanges and projects. India and China keep tightening the screws. The crypto industry's struggling too. Consensus, DYDX, and Kraken cut 15 to 35% of staff. The market's lost $800 billion in value recently due to tariffs and inflation fears, projected at 3.6% for 2025.
Staff cuts are tough. Got any market stories?
Oh, yeah. At CoinMarketCap posted on X about Kraken's 20% layoffs, asking, is the crypto winter back? It got over 100,000 views, with comments ranging from panic to optimism. Some said it's just a purge before the crypto's next boom. The X debate was like a soap opera.
X never lacks drama. What trends are poppin'?
Trump and Musk meme coins are hot, with 15% higher trading volume on dexes like Uniswap. Binance, Coinbase, and Kraken lead the pack, with Binance's new Ethereum staking platform pulling in $500 million in TVL in its first week. NFTs are rebounding with $500 million in weekly trades, led by Bored Ape Yacht Club. GameFi is also huge in emerging markets, with Axie Infinity at the forefront.
The crypto market's buzzing. What's the outlook?
Short term, expect volatility from stock market and macro pressures. ETH and SOL might outshine Bitcoin thanks to tech upgrades and ETF flows, especially with Ethereum 2.0. Long term, Trump's policies in blockchain tech will push crypto's market cap to $3 trillion in 2027, per ARK Invest. I bet in 2 years, we'll see Fortune 500 companies integrating blockchain left and right.
Agreed. Crypto's future is bright. Thanks for the epic breakdown. All right, Bit, time to wrap up. This week was a wild ride. What should investors do?
For U.S. stocks, the short term's still bearish. Go for defensive stocks like Walmart or Johnson & Johnson, cut exposure to tech like Tesla or Nvidia, and consider treasuries or bold to hedge. Watch Wednesday's jobs report and June's CPI. If unemployment tops 4.1%, markets could get shakier.
What about Bitcoin and crypto? Any tips from our chart?
Crypto's volatile, so keep it under 10% of your portfolio. Our Bitcoin chart shows strong support at $82,000, a good buy zone. For Ethereum, $2,500 is attractive. Diversify into ETH, SOL, or high TVL DeFi projects. Track Trump's policies, especially the Bitcoin Reserve and ETF flows. Check out Real Donald Trump and Elon Musk on X. A single tweet can flip the market.
Haha, X's power is unreal. What tools do you recommend?
Use Binance or Coinbase for real-time prices, TradingView for technicals, and Glassnode for on-chain data like whale moves. If you're in for the long haul, be patient. Crypto's a marathon, not a sprint.
Golden advice. Any final thoughts for our listeners?
Just one. Don't let emotions drive you. Markets can be scary, but they're full of opportunities. Do your homework, manage risk, and stay a bit bullish like the X community.
Perfectly said. Thanks, Bit, for an awesome chat today. The Bitcoin chart and X stories really made it pop.
Thanks, Ether, and thank you, listeners, for tuning in. Don't forget to subscribe, drop a comment, and tell us what you think about this week's markets. Will Bitcoin hit $150,000? Let us know.
Absolutely. We're Ether and Bit, and we'll catch you in the next episode.
Stay bullish, everyone.